Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is August 22nd, 2025. I am Luna.
I am JPMorgan. Wall Street wrapped up Thursday with a notably cautious tone. Major indexes like the Dow, S&P 500, and Nasdaq all slipped modestly. And this wasn't just random movement, right? It was largely driven by anticipation ahead of the Fed's Jackson Hole Symposium, and also some surprisingly strong economic reports that, well, poured cold water on hopes for immediate rate cuts.
Yeah, that cautious feeling, you could really see it in the bond market. Long-term Treasury yields, specifically the 20 and 30-year bonds, are now near 4.9%. That's their highest level in months. And this isn't just an observation. The really insightful piece here is why it's happening now. It suggests investors are pricing in a, higher for longer interest rate environment. And it seems driven not just by stubborn inflation anymore, but maybe increasingly by the sheer volume of future government borrowing expected to hit the market. Meanwhile, the dollar got stronger, and while gold eased a bit. Industrial stuff like oil and copper held steady. Sort of a mixed picture, suggesting caution, but maybe some underlying demand too.
Right, so the market feels a bit like it's holding its breath.
Yeah.
But underneath that, the economic data, wow, it tells this fascinating, almost contradictory story. Keeps the central bankers on their toes, I bet. We saw U.S. weekly jobless claims rise to 235,000. That's the highest since, November 2021. Which does hint at maybe a softening labor market. But then, flip side, the flash composite PMI for August soared to 55.4. And remember, anything over 50 signals expansion. Plus, manufacturing jumped into expansion for the first time in 3 years. Even existing home sales, they unexpectedly ticked up 2% in July, first year-over-year gain in ages. I mean, that points to real business growth, some confidence there.
That's the critical tension, isn't it? These strong growth signals, especially that PMI number, they're undeniably great for corporate earnings. Good news there. But they also directly fuel concerns that central banks like the Fed might feel they have to keep policy tighter, to stop inflation creeping back up, especially as the PMI report noted rising input costs. It's a real balancing act.
Okay, so connecting these, let's call them domestic market jitters and mixed signals. The big question shifts to central bank policy and, the global stage. What are the key players signaling? A major focus, obviously, is the Fed's Jackson Hole Symposium, that big annual gathering. Chair Jerome Powell is expected to sort of recalibrate the Fed's long-term strategy there. Historically, they've balanced price stability with this inclusive employment framework, right? Trying to get broad job market participation. But now the signals suggest Powell might prioritize controlling inflation, maybe even if it means less focus on that broader employment goal.
Mm-hmm. And this raises a really important question for you, the listener. If the Fed does harden its stance on inflation, like we heard from Atlanta Fed President Bostic expecting only one rate cut in 2025, how does that change your expectations for borrowing costs, for market stability? It really solidifies that idea of rates staying elevated for longer, doesn't it? And, beyond the Fed, we saw two significant global developments that really caught our eye this week.
Absolutely. First one, the U.S. and EU finalized a major trade agreement. And this isn't just about lowering some tariffs. The U.S. is cutting hefty duties on European cars, auto parts, while the EU is committing to buy huge amounts of U.S. energy and AI chips. So this deal, it goes beyond just reducing trade tensions. It feels like a significant strategic alignment. Deepening economic ties, diversifying supply chains for really critical stuff.
And the second one, equally intriguing, maybe even more impactful long-term, China is now exploring yuan-backed stablecoins. That signals a remarkable policy shift. I mean, really remarkable. The real insight here, I think, isn't just about boosting the yuan internationally or chipping away at the dollar, though that's part of it. It could potentially allow China to bypass traditional global payment systems. That could give them, unprecedented economic and maybe even geopolitical leverage down the road.
Wow. Okay, so as we bring all these fascinating threads together, what should you, our listeners, keep an eye on in the coming days?
Well, the Jackson Hole Symposium continues through Saturday. You'll definitely want to pay close attention to the central bankers panel. You've got leaders from the Bank of England, the ECB, Bank of Japan. Their messages, whether they're coordinated or diverging, could really set the tone for global markets come Monday morning.
And my provocative thought for you today, just consider how China's potential yuan stablecoin could, maybe subtly at first, but significantly over time, reshape the whole landscape of global finance and trade. How it might fundamentally alter cross-border transactions, and maybe even how power is distributed. Keep learning, stay curious, and thanks for taking this deep dive with us. You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai. Know what moves your money.